Good evening, everyone, and welcome to the virtual IPO meet of Can Enterprise Limited. Can Enterprise Limited is textile manufacturer with over 2 decades of expertise in producing rich and finished fabrics for the both domestic and international markets. The company exports to the 10 plus countries and is an ISO certified company. Recognized for its innovative and commitment to quality, Ken offers a diverse range of fabrics and also approved vendors for global brands like Zara, Target, and Primark. Now we welcome to the guest Mr. Nikunj Bagadia, promoter, chairman, and MD of the company. Welcome, sir.
Thank you there. Thank you there.
Mr. Sachin Mulai, CFO of the company, and Mr. Pawan Mahur from Corporate Makers Capital Limited, merchant banker.
Thank you, Jay.
Now I had like to invite Nikun sir to give a brief presentation. Over to you, sir.
Thank you there. So you are putting on the presentation? Yeah. Yeah. Welcome, friends, to this investor presentation for the IPO of Ken Enterprises Limited. So here, I would like to share the company overview. We are a 25-year plus old in the textile manufacturing based out of Ichalkaranji. We are a ISO 9001 2015 certified award winning textile manufacturer. We've been recognized with prestigious awards from councils like the TexProSil, which is the Textile Export Promotion Council of India. In terms of our product portfolio, we have a very diverse and large range of fabrics that we offer to the customer. It has both regular as well as sustainable fabrics in gray as well as finish. We cater to the domestic as well as the international market. Almost 10 countries plus is where the exports happen to. The company is a approved vendor for international brands like Inditex, which has brands like Zara, Massimo Dutti, Pull and Bear. Another brand is Target and Primark. There is a offering of a very diverse range of fabrics, which include plains, twills, structures, chambrays, using metallic yarns, multi-layered fabrics, and a host of different diverse fabrics. The business model of the company is based on asset-light model, where the company leverages Ichalkaranji's fabric weaving ecosystem. The third-party job work is done to scale up manufacturing capacity without incurring capex. The company has in-house two manufacturing units spanning 50,000 plus square feet in Ichalkaranji itself. Also, with sustainability initiatives, we also use the head offices powered by a solar rooftop of 8 kilowatt. The main competitive edge of the company is designed to delivery solutions with a strong focus on product development, quality, and timely delivery. We specialize in made-to-order fabrics across multiple end uses, which include apparel, home textile, industrial applications, and many more. The fabric SKUs and the width that we offer, width in the sense the range of fabrics that we offer vary from 18 inches wide to 148 inches wide. So that is the whole range of fabrics that we are doing. Next, Shreya. So this is briefly captures the journey of Ken over the last 25 years. 1998 is the year when the company was incorporated by the name Ken Textiles Private Limited. In 2004, we started our own first initial manufacturing capacity. In 2010, Unit 2, the second unit was established, where imported machineries were gotten from Italy. These were Sulzer machines. In 2013 was a major milestone where the company went in for capacity expansion and added brand new Picanol airjet weaving machine at its original factory. This led to the start of fabric exports in 2014. And in its first full year of exports, financial year 15-16, this was the first full year of exports of the company. So we got the first Exprosil gold plaque for highest export of grey fabrics from India. That was for the year FY 15 and 16. And from there on, in 2019, we were a winner for the Texprosil silver plaque for highest export of fabrics, and also the gold award winner for the highest employment generation in MSME. And during this period, there were continuous, almost every single year, the company has won an award from Texprosil, except for I think just 1 year. Every other year, there was an award from Texprosil. COVID brought its own opportunities and challenges. So the biggest opportunity in 2020 we got was we started exports to Europe at the heart of COVID. 2021, we started finished fabric exports to Latin America and Thailand. And finally, in 2024, the company was converted to a public limited company. Next, Shrey. The strength of the company is having multiple sustainability certifications and compliances, like Global Organic Textile Standard, which is known as GOTS, Global Recycle Standard, GRS, Organic Content Standard, OCS, ISO 9001-2015 is already there. Also, the Better Cotton Initiative, popularly known as BCI. So we are certified for both BCI mass balance, which is a virtual account balance that you maintain, and BCI physical, which is a physical traceability that you maintain for very, very premium customers like IKEA and the likes of them. Next slide. These are some of the key achievements and honors that the company has been bestowed over the years. The gold plaque for highest fabric export by Texprosil in 2016. Again, best exporter award by Indian SME, awarded by SME Chamber of India in 2015-16. For years running, we've got the best export achievement award by the government of Maharashtra in 16 and 17, 17, 18. And also, I think the further awards have been announced by them shortly. The silver plaque for export performance by Texprosil in 18-19, again 19-20. The gold trophy for highest employment generation by Texprosil in 18-19, and again in 19-20. Gold plaque for outstanding export performance by Texprosil in 2021 as well. And we got awarded by MSME award. Successfully, we were nominated by ET for clothing and apparel in MSME in 21-22. For TFI exhibitor, we won the best product award at the TFI FNA show in 2022. Again, gold plaque by Texprosil in 21-22, 22-23. And again, the best participant award from TFI in 23-24. Next slide, please. As you can see, we have geographical presence across almost 10 plus countries, right from Mexico, Dominican Republic, Peru, Portugal, Italy in Europe, to most of East Asia, Southeast Asia, right from Bangladesh, Indonesia, Thailand, Vietnam, South Korea, and Japan. Next, please. This is the management team of the company, the board of directors. Myself, Nikunj Hariprasad Bagadia, I am the chairman and managing director. Mrs. Bina Hariprasad Bagadia, my respected mother, she is a promoter and independent, non-independent director. Sachin Janardhan Mule, who's present right now, he is a whole-time director and the CFO of the company. Miss Arshita Singh, she's a non-executive independent director. Miss Rashmi Sagar Mitkari, again, she's a non-executive independent director. And Mr. Vinay Kumar Jhawar, he's a non-executive independent director of the company. So these are briefly the product portfolio and applications of the products that we do, right from high value apparel fabrics, which are used in, again, high value apparel, women's apparel, voiles, canvas fabrics, which are used for shoes, bags, cargo pants. We do a lot of organic and sustainable fabrics, which is the USP of the company. All of these organic and sustainable fabrics essentially go for high-end apparel. Then bed linen, which is used in home textiles. We do a lot of contamination-free white guarantee fabric. Again, and uses high-value apparel. There is a narrow width fabrics we do with the close selvage. These are used for medical bed sheets in South Korea and a lot of other Asian countries. Double-faced fabric is used for apparel applications for kids and women. Workwear fabric we do, which is used for uniform for workers. And then shoe canvases. So these are just some of the applications that we do, the fabrics that we do. Next, please. As I mentioned earlier, we have two manufacturing plants situated in Ichalkaranji, spread over 50,000 plus square feet. On the left, you see there is unit 1. On the right that you see is the unit 2. So we have these two factories which are in-house. Next, please. This is briefly the in-house manufacturing capacities. Between unit 1 and 2, the capacity has been stable across the last 3 years at 1.45 crore square meters. The capacity utilization is almost 89% across all the years. As you can see, its utilization is about 1.42 crore square meters. The plants are all operating at very high efficiency with 98% plus capacity utilization. The operations are scalable because of the strategic tie-up of manufacturing with local manufacturers. The focus is again on sustainable and high quality, high value fabrics. Next, please. These are the overall sales numbers given here. This is a breakup of sales coming from in-house manufacturing and the job work manufacturing. The total sales in the last financial year has been 402 crores. 402.2 crores, of which in-house manufactured sales was 141.88 crores, and the outsourced contract manufactured sales amounted to almost 260.33 crores. So as you can see, our in-house manufacturing to sales is about 35% and job working is 65%. Over the last 3 years, if you see the trend, the in-house capacity has remained same, but the sales have gone up, which is why the job work quantities have gone up. And that is how the business runs on an asset light and scalable model. Next, please. This is the slide showcasing the revenue breakup from domestic and exports. So over the years from FY22, the domestic was 70% and export was almost 30%. FY23, the domestic increased to 76, the export went down to 23.5. Last financial year, it was about again 76.4 export and 23.6% was, 76.4 was domestic and 23.6% was export. Even currently, for the current financial year till November, the ratio is almost similar. So broadly, the export domestic mix stands at 76% domestic and 24% export sales. Next, please. This is the revenue breakup from the top 5 countries over the last 4 years. So as you can see, the highest dependency or highest exposure in exports is still South Korea, going from 68% to 66 to 76, and currently standing at 79.78%. The top 5 countries have been South Korea, Bangladesh, Italy, Thailand, and Mexico. The Bangladesh exposure, if you can see, has gone down gradually over the years from 11.22 crores in FY22 to just 3.91 crores in the current financial year. Italy, this was the market we started in COVID. So it was at a high, we did 9.8 crores, and then it went down to 3.45, gradually picked up 4.81 crores in the last financial year. And in the current year, it stands at 7 crores plus. Next, please. The revenue breakup from the top 10 customers across both domestic and international. The breakup is FY22, it was 130.87 crore, which is 36%. FY23 was 145.15 crore, around 39.87%. FY24, it was 142.12 crore, again around 35.35%. And in the current financial, it stands at 123.99 crore, which is 38%. So as you can see, over the years, the revenue from the top 10 customers has been in the region of 35 to 38%, 35 to 39%. So the over reliance on the top 10 customer is not there, and we have a spread across a lot of customers. Next, please. So this is the typical Indian textile industry overview. The projected size of the Indian market is $350 billion by 2030, growing at a 10% CAGR per year. As it stands, India is the third largest exporter of textiles and apparel, with exports expected to reach about $100 billion in 2030. Textiles contributes about 2.3% to India's GDP and 12% to its overall export numbers. Indian textile industry employs almost 4.5 crore workers, including 35.22 lakh handloom workers. India is also the world's largest producer of cotton fiber, with 7.2 million tons expected by 2030. The home textile industry is expected to grow at 8.9% CAGR, reaching 23.32 billion by 2032. Another sector which is growing very fast is the technical textile sector, poised to do about 10% annual growth and ranking India as the 5th largest market globally. The government has also taken a lot of initiatives for the industry, including the SITP, the TUF, the Mitra Park, and they are driving investments in this sector. Even the budget couple of days back had few announcements which were very pro textile industry. Next, please. A path to global growth and competitive advantage. So the Indian textile and apparel market is projected to grow at 10% CAGR, which will reach almost 350 billion by 2030, and exports to be about $100 billion. Cotton production to reach 7.2 million tons by 2030. Textile exports stood at 28.72 billion in FY24, and ready-made garments exports were 2.2 million in FY25 April to June quarter. In the current year, apparel exports have increased by almost 11.5% compared to last year. India has a very big competitive advantage. It has a cost advantage and skilled workforce compared to other major textile producers. There is a very good policy support in terms of 100% FDI allowed in textiles. Government schemes like PLI, which has an outlay of $1.44 billion, and training program, which has currently 1.83 lakh beneficiaries. Almost 900 crores allotted for textile schemes. Total FDI inflows has been 4.47 billion from April of 2000 to March of 2024. Strong growth is expected, including automotive and industrial textiles, with markets projected to reach 3.7 billion and 3.3 billion by 2027 respectively. Next, please. These are some of our competitive strengths. Experienced leadership. We have been in the business for almost 4 decades here in Ichalkaranji, but I myself have been here. I myself has been leading the business for almost 25 years now. The financial performance has been pretty consistent. The profit after tax for FY24 was 8.92 crores with an EBITDA of 26.7 crores. The asset light model for Ken makes it a very scalable operations, leveraging a strategic location in Ichalkaranji with an in-house capacity of 1.45 lakh square meters per annum. We have long-term client relationships, repeat business from established B2B customers, strengthening market reputation and attracting new clients. Almost 80% of the business comes from repeat customers, and these customers have been with the company for almost 6 to 8 years now. There's a diverse product portfolio. We offer almost 1,000 plus SKUs, providing a one-stop fabric sourcing solution. There is an in-house product development team, which there's an in-house product innovation, driving partnerships with global and Indian apparel brands. And most important is fast delivery and development. Quick turnaround from design to delivery, ensuring customer satisfaction, loyalty, and repeat business. Next, please. So these are some of the business strategies that the company focuses on. Innovation, blending innovation and expansion, where we are planning organic growth through product innovation and brownfield expansion for efficient scaling. Global brand approach, where you start getting yourself nominations directly from end brands, the international brands, which not only makes the customers mandatory to buy from Ken, but also increases your the credibility and the customer approach. The focus on quality, rigorous quality control across production, ensuring customer trust and repeat business. Maintaining and building strong relationships, building long-term mutually beneficial relationships with suppliers, customers, and employees. Geographical expansion, selling to 10 plus countries, aiming to grow global presence through marketing and trade events. And product portfolio. As we mentioned earlier, the offering is very, very diverse for end applications of apparel, home textiles, medical sheets, workwear, catering to both domestic and global markets. Next, please. So these are the financial highlights of the company over the last 3 financial years. including the current year till November. The revenue in FY22 stood at 354.79 crores. FY23 it was 363.96 crore. FY24 402.21 crore. And revenue till November of 24 in the current financial year stood at 326.42 crore. The EBITDA margins in FY22 were 2.68%. It went down to 1.32% in FY23, and FY24 it increased to 4.91%, and in the current year it is at 5.29%. The PAT in FY22 was 2.36 crores, increased to 3.94 crores in FY23, and FY24 it stood at 8.93 crores, and currently it is at 9.53 crores. Next, please. This is the profit and loss statement for the last three in the current financial year. The total income, as we've seen in previous slides, in FY22, it was 360.32 crores. FY23 it was 375.23 crores. FY24 it was 409.13 crores, and for the current financial year till November 24 it stood at 332.85 crores. The total expenditure in FY22 was 356.67 crores, which resulted in a PBT of 364 crores, tax of 1.27 crores, and a net PAT of 2.36 crores. In FY23, against total income of 375.23 crores, there was a total expenditure of 370.25 crores, a profit before tax of 4.97 crore, tax of 1.03 crores, and a profit after tax of 3.95 crores. The last financial year, FY24, the total income stood at 409.13 crore, and the total expenditure against that was 397.21 crore, resulting in PBT of 11.92 crores. The taxation was 2.99 crore, and the PAT was 8.93 crores. Currently, in the current financial year till November 24, the total income stood at 332.85 crores, against which the total expenditure is 319.92 crores, resulting in a PBT of 12.93 crores, a taxation of 3.4 crores, and a PAT of 9.53 crores. Next, please. And these are the balance sheet numbers. FY22, the net worth was 31.98 crores, increasing to 35.92.54 crores, going up to 44.85 crores, and currently, as of November end, it stands at 54.38 crores. The current liabilities have been in FY22 146.91 crore. The total liability side of the balance sheet in FY22 was 187.26 crores. In FY23, the current liability stood at 149.85, and the total equity and the liability side of the balance sheet was 195.16 crore. In FY24, The current liability stood at 192.88 crores, and the total equity and liability side was 242.16 crores. And as on November 24, the current liabilities were 209.77 crores, and the total equity and liabilities stood at 266.30 crores. Coming to the asset side, FY22, as you can see, the fixed assets have remained almost same at 8.5. FY22, the non-current assets were 12.99 crore, and the total current assets, including inventories, trade receivables, cash balances, and other current assets, the total current assets was 174.27 crores. The total assets were 187.26 crores. FY23, the non-current assets were 13.20, and the current assets total was 181.96 crores. The total assets came to 195.16 crores. In FY24, the non-current assets were 13.53 crores. The current assets were 228.62 crores, and the total assets came to 242.16 crores. And finally, as on November of 24, the non-current assets were 13.59 crores. The current assets were 252.71 crore, and the total asset came to 266.30 crores. Thank you. The next one, please. These are the key ratios. The return on equity in FY22 stood at 7.39, went up to 10.99 in FY23. FY24 it was 19.90, and currently as on November end it was 17.52%. The return on capital employed, FY22 it was 33.41, FY23 32.58, FY24 51.52%, and as on November 24 it stood at 40.24%. The EPS has continuously increased. From FY22 it stood at 1.29, FY23 it went up to 2.15 rupees per share, FY24 it was 4.86, and as on November end it stood at 5.19 per share. Next one, please. These are the other key ratios of the company. The net asset value has increased from 17.41 in FY22 to 19.56 to 24.42 in FY24, and currently as on November end it stands at 29.61. The current ratio in FY22 stood at 1.53, went up to 1.66. The year ended FY24 at 1.53, and currently it stands at 1.50. And the debt to equity of the company in FY22 was 0.25, remained the same in FY23 at 0.25. FY24 it was 0.09, and currently it stands at 0.03. Next, please. Pawanji, will you be taking up the issue details?
Sure, sir. Sure. I'll take that. So, our issue is opening tomorrow. That is on 5th of February 2025. And the issue will last for 3 days, 3 working days, starting from 5th of February to 7th of February 2025. So, our total issue size is 89,99,200 equity shares, wherein 61,92,200 equity shares are a fresh issue to the public, and 27 lakh equity shares will be for offer for sale. So as you can see, the face value is 10 rupees per each. and the issue price is 94 rupees per share. So the total issue size is 83.65 crores, and the lot size wherein is 1200 shares, and we are proposing this issue onto the NSE Emerge platform of National Stock Exchange, and the merchant banker to the issue is us, that is Corporate Makers Capital Limited, and the registrar to the issue is Skyline Financial Services Private Limited. So moving further onto the issue structure. Okay, I'll explain that. For the NIA part, NIA category, we have up to 42 lakh 27,000 equity shares. For retail institutional investors, we have 42 lakh again 27,000 equity shares. Market maker, we have the buffer of 4 lakh 45,200 equity shares. So the pre-equity shares as on date is 1 crore 83 lakh 66,280 equity shares. Post-issue equity shares will be 2 crores 45 lakh 65,480. And the post-issue implied market cap will be roughly around 230.91 CR. Next, please. Okay. So the shareholding pattern, I'll explain you that. The pre-issue shareholding pattern is promoter and promoter group is roughly around 81.21 percentage, accumulating to 1 crore 49 lakh 1400 580 equity shares. And in the public category, the pre-issue is 34 crores 51 lakh 700 equity shares, representing 18.79%. Moving further, post-issue holding of promoter and promoter group category is 1 crore 22 lakh 14,580 equity shares, representing 49.72%. And the public category is 1 crore 23 lakh 50,900 equity shares, representing 50.28%. Next, please. Okay, so this is a critical part. So I'll explain you that the object of the issue wherein the issue will be deployed, right, for the expansion of the business activities. So the issue proceed, total gross proceed from the issue is on the upper band considering it is 5827.25 lakhs, wherein if we deduct the issue rate expenses, that is 524.52 lakhs, the net proceeds of the issue which is available to the company is 5302.73 lakhs. Now this amount will be deployed in this manner that unidentified acquisition in India and abroad is categorized for 625.00 lakhs. Subsequently, the purchase of new machinery, wherein we are upgrading the machinery, wherein we are contributing 453.30 lakhs. Subsequently, we are renovating our existing manufacturing facility, wherein the company is investing into the capex side, that is 376.54 lakhs. Last, to expand and to meet the working capital requirements of the company, they are deploying 2,500 lakhs towards the working capital issues, or to meet the working capital requirements. And the general corporate expenses and issue expenses, the cumulative value is 1872.41. This is the breakup of the object of the issue wherein the company is utilizing the issue size. Moving further. So over to you, Nikunji. Thank you again.
So, thank you, sir, for providing insightful presentation. Now we move to the question answer session.
Please.
So PPT looks good.
Thank you.
Next. So first question is, how much do you depend on external supplier for raw material? Have you considered making them in-house?
So see, the raw material for the company is yarn. It can be cotton, rayon, or synthetic. It is basically yarn. And yarn is 100% procured from outside sources. We have not considered making it in-house because India is surplus in yarn manufacturing. The installed capacity of India in spinning is 30% more than its consumption, which is why India is also the largest exporter of yarn in the world. So there is no question going forward that we are looking at getting into the raw material manufacturing side of it, because we are very clear it's abundantly available in India.
Next. Companies focus on sustainable and high value fabrics. Do you have pricing power in the market, or is the industry still highly price sensitive?
So yes, the industry definitely is very, very price sensitive. There is no question about it, which is the reason which has driven us more towards sustainable fabrics, more towards nominations, compliances, social sustainability compliances, getting into design to delivery, getting into product development, into high value fabrics. The moment you move into all these areas, definitely the pricing is better and there is little bit pricing power available to you and more sustainability available to the business.
Next. Hello, sir. Good evening. I want to know, do you have fixed price agreement with supplier to manage raw material cost risk?
So how this works is you do not have outright fixed price agreements for 6 months or 1 year. So typically, what you do is you do a mix of 2 month, 3 month fixed price, depending on where the market is. But most of the business works on back to back raw material covering. The moment you do a front end deal, within the next 60 to 120 minutes, you book the raw material required for the same, so that there is no open risk in the market.
Next. Are there any new international market you are targeting?
Yes, definitely. Latin America, I think, is very, very underserved by us. So, Latin America is one market where we think in the coming time we should be able to do good business.
Next. Among your 10 plus export market, which region do you see as the biggest growth driver in the next 3 to 5 years?
I would feel Latin America should be amongst the bigger markets. Definitely, Bangladesh should improve going forward. Thailand should be better, but bigger chunk could come in from Latin America. We are already doing little bit in Peru, Brazil, Argentina, Mexico, but that market could grow up further.
Next, what are the biggest logistic hurdle in exporting to the market like South Korea, Bangladesh, and Italy, and how do you overcome them?
So logistically, I think Bangladesh there is a bottleneck because you send by road, and the land port at Petrapol near Calcutta there is a bottleneck over there. So that takes time. But rest of the places, I think logistically it's not really there is no friction. We are about overnight 10 to 12 hours from JNPT. So we load a container in overnight it reaches the port. So logistically, South Korea really doesn't have a problem. South Korea or Italy, Bangladesh, there is definitely a challenge, but it has become standard part of life for everybody, and everybody is used to it now. The shipping to Europe had become problematic during COVID and because of the Red Sea crisis, but now that's all settled down and it's come back to almost normal. So I think it's not really such a big issue anymore.
Next, the rise in demand of customized and small batch textile production. How does Can Enterprise cater to such requests?
So that is our strength. So I mean, it is not about it. That is the strength, and that is how we have built our business. So practically 80-85% of the business comes from customized fabric, made to order fabrics. And batch sizes we go as down as sampling 100 yards or 100 meters, right up to 5 lakh meters. So the PO size can vary from 100 meters to 5 lakh meters, and we are very well geared to do either of them. So that is the USP of the company.
Next, how often do you create new fabric design and material, and how do you make sure they match global fashion trends?
So practically on a thumb rule basis, if you see, there has to be the designers are given a mandate to do one new design every single day. So they keep coming up with new designs. Based on that, also the designers are in touch with the designers at the customer's end. So on a practically on a daily basis, some new design has to come out. And this results in about 30 in a month and about 100 over a 3 month period or over 1 quarter. So in 1 quarter, when you go and present to the customer about 100 different designs, they definitely pick and choose at least 10, 15 of them. which gives us a edge. And how do we ensure that they match global fashion trends is we also have subscription to this global portal called WGSN, which is a London based portal which gives a daily feed on what styles, what fashion trends are happening across the world. So that way, our designers, our marketing team is also aware of what new patterns, structures, fibers are in trend, what colors are in trend. Based on that, they do the designing.
Next, how does Can Enterprise mitigate fluctuation in raw material prices, especially cotton, which is major input cost?
Yeah, so the best way to mitigate is not to leave any open positions. The moment you book a order, you back to back, you cover the raw material and not keep waiting for the market to give you a better price. So that is the only way you can mitigate these fluctuations because there is no other way to do it. So you keep the moment you are booking a sale order at the same time you book the back end raw material order to order, and also for the raw material which is very common and regularly used, we do get into directly buying from the mills and get into some 2 month, 3 month contracts which help us manage it pretty well.
Next, EBITDA margin is increased significantly from FY23 to FY24. What were the primary drivers, and is this sustainable?
So basically, there were a couple, three, four factors which helped us. The first factor was if you see over the years, we've started working directly with the end customers instead of going through agents, which is a typical industry trend. This resulted in less commission payouts. Second was on the export logistics. Post COVID, the export logistics cost has shot up 3 times, which has now come down to regular cost. So the logistic cost has also come down marginally. Again, luckily 23, 24, the raw material prices also corrected a bit and are now pretty stable. Then we started buying directly raw material from the mills instead of buying through traders or agents, which has helped us save on the raw material cost. And all of these things going forward are sustainable and will improve further. So we definitely feel EBITDA margins going forward should sustain and improve.
Next, what percentage of revenue is derived from your top 10 customers?
So as we can see from the presentation, it is around, I think around 65% was from the top 10 customers. Let me just check. I think the number is something around that.
35.
35%, sorry. 35 to 39% is from the top 10 customers.
Next, given your asset light model, how do you ensure sustainable scalability while maintaining product quality and margins?
So we break this up in terms of scalability is not a challenge because there is a pretty big ecosystem available in this region for contract manufacturing with world-class manufacturing setup. So scalability is not a problem. The challenge or the whole strength is in how do you maintain the product quality. So this is where over the years we've built our entire ecosystem, our processes, our team, our internal Q&A checks, which maintain that, which ensure that we maintain the quality required by the end customer. And as you can see, there is practically in this entire business, you will see that there are no rejections or returns or all those kind of issues don't exist because we take care of the quality at the production stage. And maintaining this asset light model will definitely help us sustain the margins.
Next, how do your margin compare with the other Indian textile manufacturers and global competitors in similar segments?
So as far as I'll just take the second half of the question, global competitors are concerned. The global competitors come out of China whose numbers nobody knows. So I would not like to comment on that. As far as Indian textile manufacturers are concerned, I think we are pretty much there and better than them. And I think we will improve going further. If you look at the listed companies out there, I think we are definitely marginally better than the other listed companies in the same space.
Next, what are the biggest logistic hurdles in exporting to market like repeater?
Already done this, yeah.
Yeah. Next, the rapid growth of technical textile sector. Does company have any plans to expand into this high margin segment?
It's a good question. In fact, some of the products that we do are used in technical textiles. Some of the fabrics that we do are going for coating and technical textile applications. Definitely, we are considering how to get into it. The entry barrier is high there, the margins are better, but the learning curve is also very, very high, which is why you don't have a lot of players. Definitely, we are evaluating how do we get into it because we are already at the fringes of the technical textile sector.
Next, inventory levels have increased in FY24. What is your strategy to optimize working capital and reduce inventory holding cost?
So I think key focus going forward is to optimize the inventory holding. So because of the Bangladesh crisis, we did have a challenge where a lot of orders got delayed by the customers. The orders were placed in during the last quarter of FY24. The LCs did not come through, which eventually we started starting to go through them. So that is the reason, one of the key reasons the inventory went up. Also, in the last quarter, we took up a very large order from a Korean customer as well, which the LCs got delayed a bit, which went through in the next quarter or current financial year. It went in the first and second quarter. So inventory levels have got pretty. It has come down a bit. The strategy to optimize essentially is to focus on inventory management. I think the debtor cycle is pretty okay for us. On the creditor side, we will go more. We are going more directly to the mills and buying more in cash, which will further reduce the working capital cycle here.
Next, with the projected Indian textile market is around $350 billion by 2030, how does the company plan to capture a large market, sir?
See, the beauty of textile industry is the market size is so huge that you cannot think of a single player who even has 1% of the share. And the market will keep growing. How does the company plan to grow is essentially to increase your product offering, increase your customer base, increase your markets, geographical as well as in terms of number of customers, and also increase the segments that you are working in. So, like we said, we look at technical textiles, we look at high value fabrics. So, a combination of all of these will help us increase the business size and the market share.
Next, what are the main strengths of the company?
So, yeah, the main strength, again, I will come back to the three, four things which I feel are absolutely the main strength, and I will repeat the same thing. One is absolute focus on customer, building the entire business around the customer, design to delivery, offering a single point sourcing solution to customer, having in-house designing product development capability, offering diverse and wide product range from almost 1,000 plus SKUs, having international brand nominations, having sustainability compliances and certifications in place. We've built ourselves as a irreplaceable cog in the garment exporter supply chain. So we've made ourselves irreplaceable, having 85% repeat customers, faster turnaround time for made to order products, and most important again on the financial side, the asset light business model, which helps us scale up pretty rapidly.
Next, what factor contribute to the significant reduction in the company's debt to equity ratio in FY24?
So actually, if you see, the debt to equity ratio anyway is very, very low. Now that number further went down because there's very small outstanding term loans which have got paid off. So the moment they've got paid off, the debt equity has improved. But anyway, overall also the debt equity ratio has been pretty low.
Next, what is your financial and growth projection for FY25?
So currently, as you can see, already the numbers for FY25 November are already there, and we are almost at 18-20% up, even on the top line, and a bit plus on the bottom line as well. I think that should continue.
Your revenue split between own manufacturing and job work is up approx 35 into 65. Do you plan to increase in-house production to improve margins?
Very frankly, no. I don't think increasing the commodity or the regular production in-house will improve margins. The in-house production increase that we are planning is only for high value fabrics, because if you look at the capex required to get this entire manufacturing in-house or getting the whole sales in-house, the capex would be in the region of 200 crore plus. And I really don't think it is worth doing that. So we will continue with this revenue split. The capex that goes in-house will only be towards high value and more complex and more value-added fabrics.
Next, why should customer choose your brand over other alternatives?
So yeah, like I said earlier, the reason the customers currently choose Ken is because we are a single point solution for the customer. If you look at it from the customer's point of view, a garment exporter has a very tight timeline to get the order and ship the garments out. They cannot afford any delay in their shipment cycle. And that is where the way we have built Ken, we become an irreplaceable part of their supply chain. Because we are a single point sourcing solution, we give them entire product development, right from design, product development, sampling, delivery. We have 1,000 plus SKUs available to them. So all of the things that I mentioned earlier, that makes us very valuable part of the supply chain. And that is the reason customers come to us.
Next, how do you plan to navigate market volatility when launching the IPO in the current economic climate?
I think that is for the merchant banker to advise, but I think we are pretty confident that it will be able to garner the support of investors, and definitely there is a huge runway ahead of us. If you look at it, you look at the textile sector, you look at the way textile stocks have run up in the last 2-3 days since the budget was announced. In fact, over the last few years, I think textile stocks have given pretty good returns because the industry is getting recognized by investors that yes, the industry is getting consolidated and it is growing. And there is a huge market out there. And also textile companies have started generating good wealth. So I do feel investors will support us, and rest, I think the merchant banker will help us out here.
Definitely, definitely. Basically, the growth pattern of our organization definitely giving a positive rework onto this. So, considering that we are positive that the market is going to give a positive response, that's what I can say.
Next, are you heavily dependent on South Korea for export, and are you exploring other parts to increase exports?
Absolutely. So we are consciously making an effort to reduce our dependence on South Korea. Also within South Korea, we have reduced our dependence on few customers, and it is pretty broad based now. So even within South Korea, the customer profile is pretty wide based. And other parts we are working on it, but again, you had a debacle with Bangladesh in the last 1 year. which is why the exports to Bangladesh has gone down. But that has got compensated with Italy and Europe this year. So yes, we are doing our best to spread out to other geographies for exports.
Next, what percentage market share do you currently hold, and how do you plan to increase is post IPO?
I mean, market share of what? So there could be, I could define the category the way I want to define. So there was one number that is not put out, but one of the things that I got, if you do data mining of what South Korea imports cotton fabrics from India, one of the numbers came out that we are 17% market share, 18% market share over there. Again, you look at in domestic apparel exporters, so if woven apparel export from India is about $7-8 billion, the apparel share of 8 billion is almost 4 billion. 4 billion is almost 35,000 crores. Against 35,000 crores, our domestic sales are 300 crores. So it's a huge, huge market out there, and nobody, even the biggest player in the industry, would not be doing more than 500-600 crores in domestic. So all of them are in percentage points. It could be a rounding error. So I think we have a long way to go, and definitely post IPO it will only improve going further.
Does the promoter group plan to buy back shares in the future to regain the comfortable with the current distribution?
I would rather increase the size of the pie and have a small pie, a small share of a larger pie than have a larger share of a smaller pie. So it's okay. We are not looking at any of this. We are only looking at bottom line. Let's increase the business. Let's grow the bottom line. I mean, all of these things are for us to look at eventually, not now.
Next, after buying new machinery with IPO funds, how much do you expect the production capacity to grow in the first year?
Yeah, so, like I had mentioned earlier, the capex is not going to be increasing the capacity very high. It is nominally it's going to add about 4-5% to the 5-7% to the in-house capacity. It's more going to be towards value-added fabrics, which are more bottom line accretive.
Next, the promoter group's stake has dropped from 81% to 49% post IPO. How do you ensure that promoter influence or strategic decision remain strong despite this significant dilution?
The only way to ensure is to do good work. I don't think there is any other way. The only way to ensure is, I mean, if you work well, if you lead well, if you are creating wealth, everybody would support you. So even if you have a smaller share of a larger pie, I think it's okay. It all comes down to how do you lead the business.
Next, you have allocated 625 lakh for acquisition. Are you targeting backward integration or forward integration?
So we are looking at both the options, honestly, but raw material supply is definitely not one of them. The backward integration could be into one of the backward stages in the process, or it could be forward into some value addition. We are evaluating a couple of options. The idea is to have disproportionate upside with this strategic investment rather than idea is to explore what works well, then you go out for a full-fledged or large-scale investment. So we are evaluating both the sides, but definitely not the raw material supply in terms of yarn manufacturing or any of those.
Next, how do you justify the 453 lakhs investment in new machinery? What ROI do you expect from this capex?
So we are looking at this investment only from getting into high value fabrics at a smaller scale where we start exploring that new market, because these are pretty high end machinery with very complex specifications. That is why we are planning this investment. In fact, in the whole, if you look at the weaving and the fabric sector, this is a very small investment in this sector. Now, the ROI would definitely be much more than what we are currently getting on our setup. So it should be in excess of 20% plus. But definitely, it is more of a calibrated approach at trying new and higher value products. Once that takes off and it starts showing results, then we would be planning something bigger in that area.
Next, next. Inventory level has have increased in FY24. What is your strategy to optimize working capital and reduce inventory holding cost?
I think
Already,
we already answered this
yeah,
earlier.
yeah. Next, next. Well, I can answer that. Thank you, sir, for answering my question. Best of luck for the IPO.
Thank you and look forward to all your support and wishes. Thank you so much.
Yeah. So I think, sir, we have covered majority of the question, and now we can conclude the meeting. So thank you, all of you, for joining the meeting. Thank you, Nikun sir. Thank you, Sachin sir, and thank you, Pawan sir, for joining the meeting. Thank you.
Thank you, De. Thank
Thank
you,
you.
Pavanji. Pavanji,
Thank
all
you.
the best to you also for tomorrow.
Thank you, sir. Thank you. Same to you, brother. Thank you. Thank you, everyone. Thank you. Bye bye.
Thank you.